Hello, good afternoon. You're watching Closing Trades on ET now, and for now the closing trades are favoring the bears as we speak because we have gone below the mark of 19,750 and almost threatening to go below the mark of 19,700. So a swift fall is what we have seen over the last three trading sessions. We have been seeing red on the screen as far as Nifty is concerned, and from those levels of around 20,200 we have quickly retraced as much as 500 points and now just testing that 19,700 mark. The pressure today is acute when it comes to the bank Nifty. Let's pull up the intraday chart. That index is down by a solid 1.6%. So that's the kind of pressure that we are witnessing. PSU banking names were doing all right even till halfway through the trading session. It's only in the second half that we have seen a sudden slide as far as the PSU banking names are concerned. SBI is the biggest drag if you're talking about the PSU banking names. Others like IOB, Central Bank, PNB, etc., they too have given up gains. And remember, the private sector banks are not far behind. In fact, ICICI Bank is one of the biggest drag on the index right now. Almost a 40-point drag is what that stock alone is contributing for the index. And add to that HDFC Bank. Yes, it's not as bad, but if you look at the last 3-4 trading sessions, that stock has managed to slide almost 6-7%, so not looking pretty right now. Autos are also in the reverse gear. M&M, no specific news flow, but that's seeing a cut of almost 3.5-4%. And then Hero Motor top 2 is down about 2%. So not a lot going for the markets right now. Aisha, you can't really blame the globe as well because we digested news regarding Fed quite okay in the morning, but it seems to be the incremental pressure which is coming even from the broader markets now.
Yes, it is. But first, just a word on the globe because the global handover as well wasn't quite strong. Asia has actually bled about 1.5% to near about 2% is the kind of cut that you've seen across the board. And I just want to see what the European markets are up to because they as well are feeling the heat. About 0.5% to over 1% is the kind of cut that you're seeing across the board, even for the European markets. And there we are, 1% lower for the Nifty. And this is in addition to how painful it has already been this week so far. That said, a couple of stocks that, do deserve mention. There's, of course, M&M Finance. Anisha flagged off ICICI Bank, which is a key pressure point today. There's Indiabulls Housing, which is down 6%. Hindustan Copper, ICICI Pru, which is down about 4%. So these are a couple of big drags. Having said that, couple of stocks which are feeling the heat because of the news flow around them as well. And SJVN clearly is one such case in point. The OFS got announced, which equates to about almost 2.5% stake of the company, and that's really been getting slammed from the word go. Right now as we speak, it's down a good 12%. Having said that, there's Morgan Stanley, which has come out with a note on Apollo Tyres. They're maintaining their equal weight target price at 425. Senco Gold, MK has initiated a buy, target price 630. So these are a couple of stocks which are managing to hold afloat as we speak right now. But the index surely is not. Kunal, what do you make of this fresh dip that we're seeing? And now we're just about holding on to 19,700.
So, yesterday seemed like maybe HDFC Bank could be the reason why the markets were down. But I think today seems to be more of a genuine selling day for the indices because large cap stocks, mid caps across the board, many of the sectors are showing signs of sluggishness. In fact, there was a bounce for many of the PSU banking stocks in the first, I think 15-20 minutes, half an hour for the market open, post-market open. And I think post that, we've actually seen these stocks getting into selling pressure. So that was also a minor dead cat bounce for many of these stocks. So that generally indicates that, we could probably be getting into a phase of heightened selling pressure going forward. There could be occasional bounces, but I think now what matters is the two gaps which have been created on the indices. Yesterday's open on the Bank Nifty created a gap down for the index. Today's open around that 45,000 mark, 45,200 has also created another gap for the index. So maybe with every gap on the downside, we could actually be facing resistance for the index. So keeping that as a stop loss, I think traders could probably look to maybe just hold on to short positions or create fresh shorts on the indices.
Okay, so that's the take coming in. In fact, I would, request to pull up the, twin line of the Nifty PSU index, which is PSU Bank Index, and Nifty IT. We have seen divergent moves on both of them. IT started the lowest, and since then it's been actually picking up pace, almost going into the green because stocks like TCS, Infosys, they have managed to recover quite strongly throughout the day. But it's the Nifty PSU Bank Index which has taken quite a bit of slide. It started off well in the green. In fact, it was the best performing sector. And look at that divergence, that crisscross that is happening for you on the screen. One is going upwards while other has come down very, very sharply. Naresh, your view on the sell-off that we are witnessing on PSU Bank as well as the incremental outperformance from the IT pack?
Going with the PSU banks first, the smaller names had moved up quite a bit, and a lot of them had seen irrational moves. A little mid ones also had moved up quite a bit. So PNB had gone up from 65 to almost 80. So a little bit of correction there would be normal, but something like a IOB, UCO Bank had overshot the ranges and the moves with very low float stocks. So topping out is done for a lot of smaller PSU banks. But larger PSU banks in this dip could be interesting. 570, 580 could be a good zone for State Bank of India as a buy in that area. So SBI is a buy on dips. Rest would wait for the other names. On the IT side, the risk reward is not great. Only TCS looks promising. HCL Tech, Infosys still not convinced as such, but would be looking out for TCS on dips and HCL Tech on dips.
Let's welcome on board Sandeep Sabharwal as well and find out what he's making of the market. Sandeep, hi, afternoon. What would you attribute this heavyweight selling that one has seen often? There's a Reliance which fell yesterday. There's been HDFC Bank, and today it's ICICI Bank's turn along with M&M.
Yes, I think your first sentence reflected the reason why it's happening, because markets fall under their own weight. So reasons come later or some reasons attributed, so that's perfectly fine. So I think from March, we had a 20% move in the frontline indices, nearly 35% move in the mid-cap indices, which is like slightly abnormal. So I think this move needs to get corrected. And on top of that, we have a lot of news flow around interest rates remaining higher for longer, which was in any case the base case. Some analysts are expecting otherwise, but that's what I was expecting. So that could lead to some derating in global equity valuations, which could happen in India also. So the base case assumption should be that frontline indices should correct at least 7-8%, mid-cap indices can correct 10 to 15% from the top, and then we'll be looking at new buys.
Sure. Sandeep, I was just reading your views and looks like you're not looking at any sort of recovery on HDFC Bank at all. Would recommend to maybe sell out of the stock right now to the people who are holding it, or just what's the recommendation there basically on HDFC Bank?
Yeah, I'm not buying so I would not be looking to buy anytime in the near future. Unless and until there's a severe sell-off, stock goes to 1300, 1350, then we could review our views. So I think there are significant negatives which could come into the balance sheet as well as financials. I think the margin squeeze, in fact, could be even more than what the management indicated in the analyst meet, given the fact that the system liquidity actually has become tighter and they need to replace a lot of the borrowings of HDFC through higher cost deposits, etc. So I think things will be tough for them for a year at least or more. And so either it's a time correction or it's a value correction which happens faster. So based on how it goes, we'll take a fresh view at that stage.
You tell us, what are you reading on the charts for both HDFC Bank and ICICI Bank? And I'm purely picking out the banking majors, and you could add even SBI. That's also seeing quite significant weakness today. Further drags, you think?
I think so, Aisha, because so this is a very systematic selling. It's not a panic selling that all of a sudden you've seen all the banking stocks down. But when you have a stage by stage selling, like for example yesterday HDFC Bank, today ICICI Bank, who knows, tomorrow you may have another private sector bank getting into a selling mode. I think that's a systematic selling, and that's generally indicative of a trend in the making rather than just a one-off selling on the back of some news flow, some events. So I would probably, in fact, even yesterday I mentioned that I would probably stay away from, buying these stocks on dips, because they may look very attractive, that these stocks have come back towards their strong support zone. But you need to see these stocks getting into a credible bounce and this pattern not evolving. But since the pattern has evolved, I believe it's a good time to stay away from these names and then watch on the sidelines. If they bounce back from their key support levels, moving averages, etc., that could be a point where you may look to initiate a trade.
Okay, point taken. Just wanted to pull out the stock of BLS International. They have informed exchanges now that due to operational reasons. With immediate effect, Indian visa services in Canada have been suspended till further notice. The impact of this move is negligible on our financials, as the Canadian visa issuance business contributes less than 2% to BLS International's total annual revenue. So that's the latest coming in as far as that stock is concerned. Sandeep, I might be just overextending and being a devil's advocate here, but do you think this could be one of the reasons that the market is coming under pressure, or we're trying to read too much into it?
No, it's a global phenomena. You see what happened to the US markets yesterday. You see what happened to Asian markets today. In fact, Hang Seng, I think, either went to new 2023 lows or was just above it. So I think it's a global correction which is happening. Indian markets, in fact, held up quite well when many of the other markets were correcting. And so to that extent, there might be a catch-up happening as fund flows reverse, etc., and the US dollar remains very strong. So I think these are things which will happen in the markets. It could go on for a few more weeks also. And so I think whoever is invested, there's no reason per se to panic unless and until you are leveraged too much on the long side. And for people looking to buy, I think markets will give better opportunities some way around at October and November maybe.
Yeah, just hold that thought, Sandeep. Since we're talking about the Indo-Canadian issues as well, let me actually bring on board my colleague Srinjoy. He's joining us to talk to us about what's the latest on this story and what has been the series of events so far. Srinjoy?
Relations between India and Canada have hit a new low. Now the Indian government says it will close down visa issuing in Canada, which means it will affect people who are of Indian origin and Canadian citizens and perhaps not OCI members, and their relatives who want to come from India to Canada and vice versa, because now travel will be very difficult for Canadian citizens to India. That's really the first point. But that is only part of the story, because now it's got to a stage when both countries have made it very clear that they will not come down. And the Canadians are making it very clear that yes, India is responsible for the murder. Though strangely enough, the Canadian opposition says that while Prime Minister Trudeau has made all these allegations, he has not given enough proof. That, of course, is only one point. Secondly, it is seen now that the Canadians are going to other countries, their allies, like America, like Britain, and complaining about India. Now, India is a close friend of both Britain and America. And the Americans at least have made it very clear that they are going to wait for the investigation. They want to see the results of the investigation, and only then will they do whatever they have to do after looking at everything. So it's still a long way to go, and we will have to see what the next step here is, because already things between India and Canada are not very good, and they will likely to get worse.
Worse it is sure getting already. One wouldn't have thought that India and Canada would have sour ties. Just looking at some spots of green in the markets right now. So Adani Ports, TechM, DRL, etc. managing to hold out in the green. There's Berger Paints, there's MCX, there's REC, which is seeing quite a bit of a bump up. And then there is TechM as well, which is actually seeing some green moves. Sandeep, just wanted to get your thoughts on how you would approach IT, given the light of what we heard from the US Fed with regards to where they see the US economy's shape right now and where it's going to be headed next. Do you think that's going to spell good news for the services sector, IT?
Well, Aisha, in fact, the slowdown in IT spending has happened under situations where interest rates were much lower than what they are today. There are indications rates will go up further. The clear intention of the US Fed is to slow down the economy, create more unemployment so that inflationary pressures are controlled. So in this scenario, expecting that IT services discretionary spending actually will pick up next year, I think it's calling it too early and without any basis. So I think there have been a few analyst notes indicating that there'll be a revival next year and you should buy IT because of that, I think they're totally flawed. The factual situation is that actually IT companies' growth next year might in fact be slower than what it is this year. As things stand now, things might change, but as things stand now, that's what is the indication.
Changing on an everyday basis if you go by what's been recently happening with respect to the bilateral ties with Canada as well. But nonetheless, in terms of the other stocks, it's KSB Pumps, which is suddenly up around 10-11%. Navbharat Ventures, KIOCL, Transport Corporation, Genus Power. So a lot of these varied names actually coming up, and even Capri Global, after the commentary that we got from their analysts, they have been doing okay. It's up around 4%. And of course, the electronic manufacturing theme, Sirma SGS gains on account of that. Morgan Stanley initiation this morning is actually doing well for itself as well. But specifically on the power sector, I just wanted your view, Sandeep. SJVN, of course, is down today 12% on account of on account of the OFS. NHPC is also lower in the trading session. Do you think there's a reversal which is going to happen in these stocks, or is just a one-day move and the long-term structural story, at least for the power sector for the next 12 months, seems pretty much okay?
What you're doing. So if people are playing the power generators, see, power generation is always a business in India which is low ROC, low ROE, where there are political ramifications on increasing power costs. There are issues related to recovery from the distribution company, etc. That's not going to go away. So I think this rally in power generation companies, I think, was too much, and I think we will see some decent correction across the board in this segment. On the other side, you have equipment companies which supply equipment to transmission sector, power generation equipment, etc. So I think that's a better play. So I think if at all people need to play, they should play that side of the market as the correction plays out.
Okay, Sandeep, stay with us. Lots more to talk about. For now, though, we're going to head into a break with news that we're down pretty much around the session lows. It's an over 200-point fall that you're seeing on the index alone.
Welcome back. Well, in terms of the stock, the pressure continues to be acute on M&M, ICICI Bank, Cipla, of course, on account of those US FDA, observations coming in for the Invacare facilities, down almost 3%. Naresh, your view on M&M, is there a bit of a reversal of trend here and one should look at booking profits, or is it a buy on dip strategy for M&M?
So the stock got rejected, did not move up to the expected target price of 1700. Now again back to the previous range, so would expect it to hold on above 1500 level. So as of now, trailing stop loss hit, no fresh trade here, would wait for some more time, let the markets stabilize, because it's seen a classical rejection around the 52-week highs. So only if it breaks 1500, that is where the trend changes. For now, it could again go sideways.
Right, just looking at some of the other buzzers then in trade, and really the weak ones, Indiabulls Housing, Hindustan Copper, there's Balrampur Chini, which has seen a good fall of about almost 4%, and ICICI Pru, which is also down about almost 4% as we speak. If you can just bring up the charts of ICICI Pru and of course Balrampur Chini, which is also down a good 4% as we speak right now, 4.5% in the cash markets, 420 is where that stock is. Kunal, sectorally, are banks looking like the weakest link?
Yeah, banks are definitely the weakest link. In fact, the Bank Nifty has fallen more than 1700 points in just the last 3 days. But the problem with the Bank Nifty chart is the double top formation. So, I think it was at a cusp of a breakout of the previous high. I think it missed by some 40-50 points, and that confirmed a double top formation for Bank Nifty. Now, what matters in this double top formation is the previous low support. That I think is closer to 43,600, which from current levels is just 1,000 points away from for the banking index. That could be the major test which could happen this time around. So looking at the weakness on the banking index and the recent charts, the failure of the index to make a new high, a new swing high for itself, that indicates that we may probably retest the previous lows of 43,600. So I would expect at least another 800 to 1,000 point correction in the Bank Nifty, given the way the recent charts have shaped over the last 3-4 days.
Wow, Wow, so 800 to 1000 point kind of cut is what Kunal is expecting on Bank Nifty. So, are there specific names that you would recommend to go short on or go short on Bank Nifty itself?
So Kotak Bank, ICICI Bank are the two names. So even from current levels, I would expect a short. So as I was pointing out earlier, that it's not that there's profit booking across space. There's shorting, there's profit booking, and there's everything which is happening. And that's a classic ingredient which indicates that the skew of the markets have tilted towards the bearish side. The other way, other data point, which is also something which we discussed in the morning, is a very sharp reduction of open interest for the Bank Nifty. We are at a 50% drop in the open interest in just the last 12-13 days on the Bank Nifty, and I think on yesterday's closing we were standing at one of the lowest open interest on a T-6 basis compared to the monthly expiry. So that also is a point of concern that maybe traders have managed to unwind majority of the positions and are sitting out for a correction, and hopefully this correction could probably take the Bank index back to that 43,600 mark.
Sandeep, whenever the Nifty Bank correction stalls, and Kunal does foresee another 1,000 points off on the Nifty Bank from the current levels too, what would you buy or add positions to, if at all you would buy banks?
So I think banks is a good segment to buy into after the correction culminates. So I think the preferred bet would be ICICI followed by Axis, and then one can take a choice of the other banks depending on how much they fall. So I think now it's a question of how much many of those banks fall. So for example, I'm negative on HDFC Bank, but if it comes to 1300, 1350, then we could look at buying that. So I think it's all a question of how much what stock corrects at in how much time.
Okay, so that's the take coming in on the banking stocks for now, staying away. But if lower levels come, maybe these stocks start looking interesting once again. But Sandeep, what's your take on M&M specifically? That stock is down 3-4% for no reason.
Yeah, so I think in such deep sell-offs, some stocks which, let's say, because M&M moved to new highs, so obviously some short-term traders would have taken bets on it, betting on a further up move, and that new high, then the stock falls below that earlier high, and then there's unwinding of positions. I think it's a normal phenomenon which will happen. So I think many of the stocks which might have gone up more than others, they might get sold off more than others also. So I think this it's tough to explain one day moves in specific stocks.
Okay, that's M&M. And that's also seeing quite a sharp fall today. The other segment is also all of these PSU OFSs which are kicking in, right? So from March up until now, RVNL, for instance, has seen a stake sale of about 5.5%. Just last evening, you had SJVN OFS get announced as well. And we've seen how much that stock has also cracked in trade today. Similar can be said about HAL, about Coal India too. And Sandeep, somewhere, while the government, of course, is, coughing up money for their disinvestment target to be met. But this is also somewhere a sign of topping out, right? In the near term, at least for these names.
It makes perfect sense for the government to disinvest and raise money because like SJVN, the stock has gone up more than 100%. It's a loss-making company. Last quarter itself, I think they made a loss of 270 crores. Same is the phenomena with many of the other stocks which have moved up. So they have gone to unsustainable valuations relative to where they used to be. And for the government to meet its disinvestment target, this is a perfect opportunity. These stocks, the stocks which never moved for years, suddenly have doubled, tripled. So the government should use this opportunity like other promoters are doing in terms of doing QIPs or the kind of IPOs we are seeing coming out. Now it's the buyer's discretion. So the buyer has to decide whether they want to buy at this price or not.
Okay, so that's the point coming in as far as the OFSs are concerned recently, and how the government is actually looking for more funds to, of course, fund the social infrastructure. But talking about that then, Sandeep, the beneficiaries are clearly likely to be those infra names, the EPC players. And we have seen historically that a year ahead of the elections, all of these stocks start rallying quite a bit. Would you buy the argument yet again and maybe pick up a L&T, IRB, etc.?
Many of these stocks have done well already, and they are likely to do well given record order books. And many of the companies like L&T are not only getting strong orders domestically, but also globally. So I think there's a strong story in the investment theme, but in a deep market correction, all stocks correct. So I think we'll see some correction in these stocks also, and that we'll use that opportunity to buy.
Okay, so that's the take coming in as far as the market setup is concerned. But in terms of the key movers, well, it continues to be similar pockets. But of course, Jeffries tried to point out that there is still some room left on the upside for electronic manufacturing as a theme. They prefer B2B plays versus B2C plays, and that's why for Keynes as well as Sirma SGS, they've actually initiated coverage with an overweight stance. Sandeep, would you concur with the view that one should still look at buying these names because even today they're holding up in the green despite the weakness?
Yeah, but they are abnormally valued, so I wouldn't be buying them at these prices or any time in the future, like in the near future.
Okay, Sandeep, good to chat with you as always. We'll see you again tomorrow morning. Let's get in some closing trades as well on that note. Kunal, what's on your list?
So, Interglobe has broken below its crucial, I think, 20-day moving average support as well as another short-term moving average support. That's a stock which I would look to sell.
Right. Naresh, what about your closing strategies?
So that would be a buy on Bandhan Bank. The stock is trying to make a major long-term reversal above the 250 mark. So at current levels, it's a small stop loss. Looks interesting for a positional bet.
Okay, let's take a very quick break. When we come back, of course, we're going to track the last half an hour of trade this afternoon. But hear it out from Ferdun Fisheraki as well from FGE, who says that OPEC has cut back on supply and that they want crude prices to not stay within 85 or rather stay within 85 to 95 range. He also says that there could be downward pressure on the market in the near term and he does not see a value of $100 per barrel coming back.
On the supply side, OPEC Plus has been very diligent and they've been holding the supplies back. They want to see the prices in the $85, $95 range. And we are close to $95. It probably is going to stay between 90 to 95, maybe a little bit below 90, but I doubt whether it would hit 100 or not. But on the other hand is the concerns about the financial markets. Worries about recession, worries about the Federal Reserve rate increases. And every time one bank goes bankrupt in the US and Europe, then there is all negative sentiments as far as oil price is concerned. But actually the fundamentals are pretty sound. I think on the downside probably will not go below 80 because the OPEC Plus will not allow it by trying to control the market, but there could be downward pressure on the market because the demand fundamentals are not going to be the same next year as this year.
We're closing trades right here on ET now and it's getting worse. 200 points or rather over 200 points is the kind of fall that you're seeing on the index alone. Actually, we're just about defending that 19,700 mark and all sectors are bleeding, led of course by autos, realty, pharma, banks, financials, metals. Across the board, it is a sea of red. Even globally, things are looking quite wobbly. In fact, let's welcome on board Deepak Shenoy as well. Deepak, hi, afternoon. It's quite the shake-off that, I mean, not just the global markets, but our markets in particular are seeing. Do you also recommend profit-taking before it gets worse?
Oh, well, actually, it's not that bad. I think we're still, just what 2% or 3% from the top. I don't think we're in for I mean, it doesn't look like there's anything that's so dramatic that should cause a deep correction. So, a market falling 5-10% is probably normal for the course. You're going to see some stocks fall 25-30% as well. That's just a natural consequence of market. So I don't think this is a time to say, okay, it's the top and therefore you should take profits. I don't think it's the bottom either. I think it's just business as usual. We're just cooling off after a pretty strong run in the last 6 months. So welcome it. I think some shakeout is necessary. It's normal for markets.
Shakeoff seems pretty stark when it comes to some of the large PSU banking names and, across the private banking names as well. We've seen what happened to an HDFC Bank yesterday. Today, it's ICICI Bank and SBI, and the smaller PSBs as well have been feeling the heat. what is it that you do here? Do you add positions just yet, if you want to?
We're having some, to be fair, Asha, we have some of the banks that you mentioned, but one of the interesting things here is HDFC Bank has just, they've just done a press conference. They've talked about a bunch of numbers, specifically around the fact that asset quality will slightly change because of the merger, probably get a little worse than what HDFC Bank standalone was earlier. A few other metrics will change because, as a bank, they can't lend to land. HDFC as an NBFC could lend to land. It was one of the largest lenders to land purchases earlier. So some of that growth will go away. There will be changes in the way they have to account for A, priority sector lending, B, SLR and CRR, and a bunch of others. So there's been that consternation as well. And overall, I think banking is going to see a margin cut because what happens when interest rates go up is first the asset recovery, interest rates go up, your loans reprice themselves. But about a year down the line, your liabilities reprice. So this is about a year down the line. So you're going to see banks start to report smaller margins. So we do expect some kind of a fundamental correction in terms of the margins. But overall, it's not that unexciting. I think public sector banks have run away a little more than we liked, to be fair. But private sector banks still are very decently placed, even for a 10 to 15% growth rate, which is lesser than the 25 to 30% growth rate that you used to expect from them earlier.
Okay, so that's the take coming in. In fact, since we're talking about banks, let me get on board Vamakshi as well. She's actually called out very interesting data because while the stock is under pressure today, we are seeing a cut of almost 3-4% there. What we are picking up in terms of the historical trend is that in the last decade or so, actually the stock of ICICI Bank has delivered 10% kind of returns on an average for 10 years. Let's go across to her and then, I'll specifically ask you, Deepak, about ICICI Bank.
Well, yes, generally strong seasonality has been observed for ICICI Bank in the month of October. In fact, when we look at the average returns in the month of October for ICICI Bank, they have averaged around 10% for this counter. ICICI Bank has in fact delivered negative returns in only 1 out of the last 12 years in the month of October. And in fact, the fall that we saw in October 2012 was only limited to 80 basis points. Now, ICICI Bank generally tends to be a very good festive season proxy. The returns are also supported by generally strong Q2 numbers as well as a strong outlook in the second half. When we look at the stock's price performance, yes, it has underperformed over the last 1 year. While Nifty Bank has seen a rise of almost 9.5%, ICICI Bank has managed to post returns of just 5.5%. Apart from that, another thing that is working in ICICI Bank's favor is the disappointing commentary that came in from HDFC Bank during the course of its analyst day. The expectation is that the street would look at other large cap alternatives, and ICICI Bank could be one because the analysts largely believe that the bank is expected to grow at nearly 18 to 20% as compared to the system growth of 13%. Apart from that, when we look at the asset quality for this company, it is also expected to improve, with slippages and credit costs declining to 2.2% and 0.8% respectively. This could in turn lead to the company posting an ROA of almost 1.9% over the next 3 years and an ROE of nearly 16% over the same period. So given those positive factors, fundamentally the stock looks quite strong, and has been a seasonality observed in ICICI Bank in the month of October, and that's the reason why you should definitely keep an eye out on this counter.
Okay, so that's the data that we're talking about. Deepak, would you buy the argument at all, what my colleague was talking about ICICI Bank and the historical trends?
So, the argument that historically it's done well in October probably does not make me excited. I think the bank is more, we own it, and we've owned it, beyond an October kind of time frame. So the idea would be to look at this bank longer term. I think it's still decently priced. It's not expensive. It's not super cheap either. But it's actually been able to deliver a lot of growth. I think the new management, not so new anymore, but has been able to deliver from a fundamental basis in a lot of ways. They own a lot of subsidiaries which are valuable. They own the AMC. They own, I think they have the ICICI Securities, which is eventually going to become private as well, I think, if things go the way they want it to be. They have a bunch of the other businesses as well. I think overall the bank is in a pretty decent structure. It does not have so much of the overhang of the past in terms of NPAs, in terms of concentration. It has a more diversified business than earlier. And relatively speaking, I'd buy that one argument that comparatively, where HDFC Bank used to perform better in almost every single parameter, now I think that competition is more even, and the challenges that ICICI Bank has faced in the past, some of them HDFC Bank will go through in the next few years. So I think that way the bank is relatively attractive. It's probably the most attractive private sector bank, in my opinion. So I'm biased. We own it. So I think this next results will give us an indication of how their margins, their growth will be. I hope it's going to be positive.
Right. Deepak, what is it that you're making of, what you do with Nykaa right now? I mean, sure enough, we've seen what's happened as to how the IPO gains pretty much got all erased. But today itself, you have a brokerage note which is talking about as to how it's a structural uptick that they see in the beauty segment. But yes, they are still concerned about what Nykaa Fashion can scale up and thereby the earnings downgrade coming in. The view was from Morgan Stanley. Just wanted to understand where you stand on your view on Nykaa.
So we used to like it. Honestly, Asha, I think the difference at that time was the market was large, and relatively speaking, competition wasn't that hot on Nykaa's heels. But now there is more competition, especially in the space that they're operating from both online and offline players. We've got the Tatas, the Reliances playing that part of the game. There's also the Amazon part of that. As part of competition over there. And also because offline has rebounded so strongly after COVID, you're seeing a lot more of the business in general move to offline. It is a very offline oriented play. The online part added a layer which I think helped a lot of people who could not or did not want to go, knew exactly what they wanted and were able to order online. But a lot of the purchasing here also happens, on site because they're able to identify, they're able to experience products as well. So that way, I think Nykaa has also gotten into it in a small way, opening stores. It's a little too early to call for that part of the business. They're going to probably take a few years more before they, are able to deliver at least some kind of consistent profitability. And there is still an overhang of stock sales that are there in the stock. A little bit still remains. So there's going to be that pressure as well. So not looking at it in the near term, I think we'll wait for results to show profits. I haven't seen the note that you just mentioned, but we are looking forward to results, and every time we'll reevaluate whether the original thesis is coming back.
Okay, so that's the take coming in on Nykaa as well, but it's going to be an exciting weekend at Greater Noida as India is all set to host its first ever MotoGP from September 22nd to 24th. Let's listen into the conversation that my colleague Sumit Chaturvedi had with Jack Peter Miller, the Australian Grand Prix motorcycle racer who rides for Red Bull KTM Factory Racing.
As prepared as we are every week. We raced 2 weeks ago. We're now in the thick of the championship. But no, looking forward to the heat this weekend. It's supposed to be nice and hot here. But no, looking forward to racing in front of the Indian fans. It should be a great weekend for everybody. India is a motorcycling nation, and yeah, I think there will be definitely a lot of fans around.
Anything specific you're looking forward to from this circuit as far as the race is concerned?
I think it should be a good circuit for our bike and our style. I think, there seems to be a lot of, as far as I know, I've only played it on the video games and had a run around the track this afternoon. But it looks like a lot of long straights, a lot of hard braking, definitely something I like. So, no, the track looks fun, looks very exciting to race on. So, no, definitely looking forward to it.
How different do you think it's going to be from the last racing, and can you tell us something about the last racing? How excited, or what were the important points there? What were the real takeaways for you from that racing?
Yeah, no, it's been a good season for us. We've had a difficult last couple of rounds, but we were fortunate enough after the last race to have a test on the Monday. We found a lot of information from that. we have a lot of grip in the last circuit, and you know, this track hasn't been used so much, so will be interesting to just know the grip level, but really excited to roll out on Friday and try it out.
And apart from official things, I would like to ask you, if you come to India regularly, what do you like about India the most? What's your best thing which you like about India?
I mean, today was my first day here, so I've never been here before, but definitely, you know, it was exciting driving around, going to the circuit and so on, and yeah, would love to explore a little bit more.
Okay, that's an international Grand Prix, you know, winner there, talking to my colleague. In the meantime, let's just talk about what's actually happening within the two-wheeler space while we are talking about bikes, aren't we? We have seen a fair amount of correction play out within that pack also. In fact, today, of course, most of these auto constituents as well are feeling the heat. Everything from a Hero MotoCorp to an Eicher to a Bajaj Auto, all of them are down as we speak right now. Deepak, a fair amount of flutter, right? When you had launches from the stables of Bajaj Auto, Hero MotoCorp both. Now, of course, Eicher is coming up with a better, new, improved, higher CC version of Royal Enfield as well. Where do you think this competition is going to lead?
Well, to be fair, I think the high end of the market seeing some very exciting, launches. You got Hero running the Harley, the 441, and then a few other launches as well. But these are really expensive bikes. You probably get 1.5 cars at the price of the bikes that these bikes are. But at the lower end, I think we're not seeing demand increase, and lower end is where all the money is. At the lower end, there's not been much movement for anybody. I think there was some move to the electric vehicle two-wheelers last year, but since there was this new subsidy change, or rather the government cracked down on a lot of EV two-wheeler manufacturers for not indigenizing enough, I think some of that demand will shift into the ICE space, where Bajaj and Hero probably operate in a bigger way. We're hoping to see that demand come back. It hasn't yet come back, and I think I'll wait for the numbers to change, both from a production and from sales perspective, before I go much deeper into it. TVS was exciting last year. I think even that has not been so exciting from a business perspective. The stock price has done reasonably well, but that was one area where we were interested. But again, I'm looking at this whole industry and saying, look, the numbers need to go up. We need to be selling more than 7 lakh bikes a month, which was the peak in 2018. I think it's been 5.5 years. GDP has gone up quite a lot. So, at some point we need to see some recovery.
Sure. So that's a take coming in on the two-wheeler space, Naresh. Let's talk about some of those stocks which are bucking the trend and holding up in the green, right? Look at a Berger Paints, decent amount of volume holding up with a 3% gain. There's KSB Pumps, which is up around 14%. And then, of course, you have names like Mastec and Chola Holdings as well. Anything that you would recommend, and even a REC for that matter?
So out of these names, only KSB Pumps could be interesting, because that's been in a strong uptrend all through. And we've seen the whole sector do well. So that's a fresh breakout here. But given the move today, almost 14-15%, would wait for a dip towards 3,029.50. So that would be a buy. Berger Paints looks promising, but given the crude prices and the way crude has moved up, the correlation has generally been negative. So not very, positive here. So only one to look out for on dips would be KSB Pump.
For the market, there's a bit of a recovery. What we have seen, 19,750 now. At one point of time, we were threatening to go below 19,700. So the weakness continues in Bank Nifty. Kunal, is there a line in the sand that we should watch out for when it comes to Nifty and Bank Nifty?
So I think the support for Nifty is 19,300, which means we are looking at possibly another 400 points correction on the Nifty to retest the previous swing lows. So we try to benchmark with the point where the index in the previous attempt took support or took multiple supports and then got into a process of a bounce. For the Bank Nifty, as we flagged off, it's around 43,600 as a strong support, where it was retested I think the entire month of August, and then from there it bounced off in the month of September. And for the Nifty, I think it's 19,300 approximately.
So almost 400-500 points lower when it comes to the Nifty, and as Kunal was highlighting earlier, 1,000 to 1,500 points lower is what he expects could happen for the Bank Nifty as well. What else is happening in the market? Actually, not a whole lot. Just these smaller cap names which are actually holding up, because other than that, there doesn't seem to be any strong momentum in the market as well. Deepak, where are you? If you have a shopping list ready for corrections like these, which are the sectors or stocks that come to mind?
I wish this was a correction. This is not actually. It's just about 5% or 3% or 4% from the top. In fact, I'd welcome a deeper correction. I think there'll be a lot more value in the larger caps, specifically private sector banks. Perhaps IT and pharma are poised for a recovery, but I think we need some more data. Results this quarter might help us indicate whether we should build a position now. Other than that, I think although the mid-cap rally has been quite spectacular, I still think there's a lot of steam left within some of the mid-caps. Now, we won't, for instance, KSB for a long time. Of course, it's gone up like crazy today, but it's been a stock that has done more than, I think, now 13x in the last 10 years, roughly from 2013 to now. So, the stocks like that will go through phases of doing nothing for about 2 or 3 years, and then one phase in which you get a massive move. But that does not really mean that the business is overvalued or undervalued at that point. So there will be phases of when markets kind of reprice the stock, but wouldn't have done it in the past. So I think that's happening to a lot of mid caps. We are very interested in the heavy engineering space. We are interested in companies that do B2B services or B2B products in the heavy engineering spaces. We think that a lot more industrial capex will come to India, also in the semiconductor space. We don't have really manufacturing, but I think some companies are starting to make attempts. So looking carefully at that space. And some hospitals, a little early to say how much it will move, but I think we own Narayana. I think they will also do well going forward, although they're relatively higher priced right now. I'm looking at a 10-year philosophy, 10-year thought process. However, none of these stocks are cheap. So, if there is a real correction, yes, then we'll probably buy a lot more.
Sure, that looks interesting. Okay, let's also tell you what's happening within the aviation space. And, India's newest airline, that's Akasa Air's growth plans have quite been deeply impacted because of the shortage of pilots. With more than 40 pilots actually quitting the airline, Akasa Air market share has declined significantly. And still, there's no chance of revival. So let me take it across to my colleague Samir Dikshit and find out what exactly is happening and where things stand as of now with Akasa.
Budget carrier Akasa Air is going through a tough time, and this is all because that a significant number of pilots of the airline, they have jumped off the airline and most probably have joined the rival airline. And if we go by the market share, this clearly reflects as well. As per the data available by the DGCA, the aviation regulator, the market share of Akasa Air for the month of August was just around 4.2%, whereas for the month of July, it was 5.1%. So a slippage in the market share was clearly visible, and this is all because that pilot numbers have been constantly decreasing. The flight operations has also been shrinking. Not just this, the internal memo released by Akasa Air to its employees, it has been mentioned clearly that they are going to shrink, they are going to reduce the flight operations or rationalize the network operations so as to ensure a reliable operations in the short-term period. But what we are getting to know from our sources that Akasa Air is reducing the flight or shrinking the flights on those sectors which are economically not viable or less patronage there, less passenger load factor is there. Whereas on the important commercial sector, Akasa Air is trying to fully deploy its capacity. As of now, the market share slippage is clearly visible, and Akasa Air is going through a legal battle, not just in Bombay High Court, but also in Delhi High Court. Akasa Air is constantly appealing to the court that the court should come up with a directive, with a stay order that will help the pilot to serve the 6-month notice period. But the market share slippage is not for the month of August. It is very likely that it will continue for next couple of months, because now Akasa is focusing on two parts. First is to ensure reliable operations. And also now Akasa Air 2 is focusing on to start international operations before the end of this year. And for the same, the airline has received the International Scheduled Operator designation from the Ministry of Civil Aviation.
Sure, so that's the latest coming in as to what's happening in the aviation sector. But time now to take the BTST calls, and I'm guessing there might be some STBT within that as well. Naresh, you go first.
This is a sell on Polycab, reverting after making a new 52-week high. Stop loss at 52.50, target price of 5100. Second is a buy on Bandhan Bank, which is trying to make a longer-term breakout. Stop loss at 243, target price of 251.
Okay, so that's the take coming in, a bit of a sell coming in on Polycab as well as a call on Bandhan Bank. Kunal, what about you?
Yeah, two sell calls. The first one is a sell on Indiabulls Housing. So after many days, we've seen the stock getting into selling pressure. I would sense that this could be a start of a sharp downtrend for the stock. So target of 178 and stop loss at 195. And second would be a sell on IGL. The stock has formed a bearish head and shoulder pattern on the hourly charts. Has confirmed a breakdown today from that pattern. So would suggest a sell. 444 as a target. Stop loss at 470.
Okay, just a minute and a half left to go before we wind up for the day. So Deepak, we'll let you go on that note. Thanks as always for joining in. Kunal, just a quick Nifty Bank strategy before we wind up.
If someone is a high risk trader, then I think initiating fresh shorts at current levels for Nifty Bank as well as for the Nifty futures, I think would be a good strategy. But for someone who's conservative enough and looking out to play out in terms of options, then I think buying October series options, put options for the Bank Nifty at 44,000 strike and maybe 19,500 for the Nifty futures or Nifty options could actually be a good strategy.
Okay, let's wind up, and we're closing in pretty much around the session lows, a little off that actually post adjustment maybe. 154 points lower, 0.7% of a loss, 19,771 for the Nifty futures. All sectors have managed to bleed today. Everything from an M&M to an ICICI Bank have taken quite the hit. M&M in fact is closing in excess of a 3% cut. ICICI Bank a near about 3% dip. SBI down 2.5%, IndusInd Bank down 2.25%, Kotak Bank down 2%. And then of course there has been the auto pack as well, led by Hero MotoCorp and Tata Motors, along with Bajaj Auto actually, which have seen a fair amount of red for themselves today. There's been HCL Technologies, Bajaj Finance, ITC. These have also been some big laggards, as has been the case with the broader end of the market as well, which closed in well in favor of the declines. SJVN, of course, has got to be the soured most story today post the OFS. 9.5% is where it's finally shutting shop for the day. Similar can be said about Indiabulls Housing, about Balrampur Chini. Maybe some recovery is what these stocks have seen, but quite a bit of intraday damage surely is what they've seen for themselves. But that's pretty much it on this edition of Closing Bell. Another weekday. We'll pick it up again tomorrow morning at 8 a.m.